Uh, Good morning, class. This is Professor Young. I know this is the first of a video of this kind, a screencast-o-matic of this kind. You've been somewhat independent learners throughout the semester. I've utilized Connect, Learn Smart, various discussion boards to hopefully influence or promote or incentivize you to engage in the course as an independent learner. But I have not done a good job in terms of bringing exact my voice, my views to the course. And for that, I apologize. Moving forward, I want to, at least at minimum, on a weekly basis, talk a little bit about each of the chapters. I realize that our chapters are, I usually give you students about anywhere from 10 days to full 2 weeks to complete your work. With that being said, um, you have a lot of, I might call autonomy as a student. However, as a result of COVID-19, I want to ensure you students that the work that you've done is not going to go unnoticed. I recognize the fact that some of the assignments are rigorous, most of them are, and that you've had to spend probably 4 to 5 hours per week to be successful. This is the realities of an online course, that is, a managerial accounting course. In this context, as I mentioned, I've noticed students have gotten better in the discussion board areas. A lot of you have gotten, or shall I say, completed your discussion boards with the utmost of detail, making sure to bold your key terms and the key substantive contact piece where you actually go in and talk to your peers regarding their post. On a side note, I've gotten some of my students have emailed me regarding allowing more time. Keep in mind that I've taught this class probably for the last 18 years in this modality. It's important that we substantiate as instructors at Victor Valley College, because this class matriculates to USC, Stanford, UC Berkeley, Cal State San Bernardino. Because of that fact, we have this class is a rigorous course. Thus, there are time sets that students are responsible for as if you were in a lecture course. With these things being said, as we move into the last quarter of the class, I will make sure to preview the assignments that I am assigning. And in my mind, give a due diligence look at whether or not the assignment student should be given more time. And moreover, keep in mind the fact that we are going through challenging times. And with that in mind, if there are situations or areas where I can accommodate, alternatively assign things, I'll do that. Again, thank you for your time, for listening to this screencast-o-matic, and moreover, I do appreciate your due diligence thus far. So we've talked about a number of things from a managerial accounting perspective, and we've really developed now a mindset as to how managerial accountants, truly think. Um, if I can open this up. In this regard, now we're identifying the fact that as managers, there are certain assumptions that we make when we develop these models, when we develop these statements, and moreover, these reports that are required now for the preview of internal managers. Again, one of the things that we've seen in this course is that the documents, other than the financial statements, which we talked about the very first couple of weeks, the reports, the cost of goods manufactured, the various things that we've done are really internal regarded. These are things that are going to enable the managers of the business to operate at a more accounting efficiency capacity. I did say accounting efficiency. And I believe the efficiency point comes in the fact that now we've developed these methods utilizing formulas and or graphs as we did in the cost, value, and profit analysis chapter. It was very extensive. It gave us as accounting um, academics the models that managers use to determine how many things should be sold in order for the firm to make a certain amount of profit. What is the break-even point in terms of quantities, and more importantly, in terms of a profit or a revenue metrics. So in this chapter, there's three assumptions that we're going to need to embody moving forward. And again, this screencast-o-matic is not going to go through the entire PowerPoint, but yet I wanted to, at minimum, get you started. So actual costing versus normal costing approaches. Again, when we talk about these two items, this is going to be the nexus of differentiation that we're going to look at identifying. This chapter is also going to use actual numbers of units as the allocation base for assigning actual fixed manufacturing overhead. Keep in mind that some of the things that we've done up to this point is we've estimated the manufacturing overhead based upon some formula. Now, in this case, we're going to be given a certain number of things. There were 15,000 widgets that were actually produced. This will give us then a better mindset of the types of information that we can develop. And moreover, this information will provide more predictable planning evaluation points. And thirdly, we want to assume that the variable manufacturing overhead cost per unit and total fixed manufacturing overhead cost per unit remains constant. Now, of course, we found in the last chapter that y is equal to a plus bx, whereas the fixed cost, was in every case the same. I know one of my students had some issues with developing the cost, value, and profit analyses, and when the student emailed me, I indicated to ensure that in order for you to have a linear cost line, it had to touch the vertical plane. And this was the point at which fixed cost was delineated. So for this purpose, I talked earlier to the fact that we'll be using actual numbers, but yet variable and fixed cost will be constant. And this is something that is now a nuance. This may, in some regards, make this chapter somewhat questionable, but yet I'm sure we'll see the value in terms of a managerial accountant looking at two different perspectives. And then again, these perspectives will bring about a greater vision. So, variable costing and absorption costing. And you'll notice that you've worked with these items at length to the degree that we've identified the material that a firm uses to produce a particular product, the amount of labor. Again, we talked to two specific styles and or formats. That was process, order, and job costing. So process, order costing, moreover process costing, looked at a particular way an item was produced in terms of a process. On the other hand, job order costing looked at the specific, how shall I say it, touch element of labor. In that division, the direct labor then was viewed differently. In this case, the juxtaposition of direct labor will be the same. That is, we're going to identify that there are two types of cost, product and period. If we go back to chapter 1, there was some specific information regarding this. The key point that I believe is important is that you'll notice that under the absorption costing, fixed manufacturing overhead is part of the product cost, compared to in variable costing, fixed manufacturing overhead is related to the period cost, right? So if fixed manufacturing overhead is related to product cost, then there's going to be maybe a more extensive calculation for this particular cost value. And going back again to the assumptions that were delineated earlier, that we will still make some assumptions about variable and fixed, but at this time we're identifying, I would call it a cost domain as to where the costs are actually mm, sequenced and or aligned under these two assumptions. So one of the things that you want to make sure to do as you work on the problems and you go through the Learn Smart is to make sure to view each of your given values first. Again, this might be something that if I were doing this at home, I would actually copy this information down on a separate sheet of paper. And by doing that, then I can establish the fact that this is going to be some given information that I'm going to need redundantly. Um, and then two pieces of these calculations will show us then in essence that as we start to develop absorption and variable costing methodologies, that inherently the numbers are going to be slightly different. Thus, the key takeaway is which is the best costing method to use. Keep these things in mind. I don't want this screencast to be too long, so I'll have a part two to this discussion. And when I begin next time, probably on Wednesday of this week, I'll come back and talk more about the income statements. And that is how these two costing methods will impact these financial statements. Last thing I want to say is that we probably won't have many more discussion boards. I think there's going to be one, maybe two more discussion boards. And so as you review your grades this week, keep in mind that it is mandatory that you include two posts regarding your peers' discussions. And even if they got the right answer, you must add some substantive, ingrained language that evaluates their work compared to yours or evaluates their work compared to others. This process is necessary for our agencies, our accrediting agencies, to ensure that our students are actually doing engagement with their peers. Okay. Again, welcome back. I hope you had a wonderful spring break, and I hope everyone's family has has been spared the COVID-19 impact. And if anyone in your family has been impacted, again, my sympathies are with you. Okay, stay encouraged and stick, stand, and stay. We'll talk again soon.